Hello and welcome back to our channel Polo Vega. Ladies and gentlemen, on our last video we spoke about currency risks, inflation, interest rates, international exchange rates and money markets. Today we shall talk about Forex markets and FX trading. But before we go on to our video, let's look at the disclaimer/disclosure clause. Disclaimer/disclosure clause. The contents of this presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the eighth of a series of interactive videos aimed at educating our viewers about Forex markets and FX trading as a continuation to our last video on currency and foreign exchange. Forex market is a worldwide, decentralized, over-the-counter financial market for the trading of currencies. The purpose of Forex market is to assist international trade and investment. Financial centers around the world function as anchors of trading between a wide range of different types of buyers and sellers around the clock except weekends. The Forex market allows businesses and individuals to convert one currency to another foreign currency. The Forex market is where global exchange rates are derived by everyone, including market speculators and end users of currency. People and companies buy and sell currency much like one buys or sells any other asset class, including equities, options, and futures. Forex history and behavior. Over the past few decades, Forex has developed into the world's largest global market. With restrictions on capital flows removed in most countries, leaving the market forces free to derive foreign exchange rates according to their perceived values based purely on supply and demand of currency. Like any other commodity or service, an imbalance between supply and demand moves the price up or down until they balance each other out. The adjacent graph shows the relationship between price, supply and demand. One can see that as supply goes up, the price goes down, and similarly as demand goes up, the price goes up. Forex charts and candles. Forex charts help us with all the information as technical traders that we need to participate in trades involving currency pairs. Unlike other asset classes, there are very few gaps in currency charts, which makes them easier to trade. Candlestick charts are the best friends to a trader. They help us in establishing the point of inflection, the ongoing trend, and then we establish demand and supply, or the conventional support and resistance. Once we've done these things, then we know the trade direction and the area where the supply or the demand is high and where we can go long or short. Finally, and most importantly, establishing the emotion of fear and greed amongst participating traders is what we establish through charts. Every chart has a number of elements, and each element plays its own role in helping a trader establish a trade and its direction. Some of the basic elements are open/high/low/close volumes, ticker symbols, time frame, price axis and current price, day and time axis, and likewise there are many chart elements, and each of them carries its own importance and should not be ignored while placing a trade. The price of a Forex pair is influenced by a large number of factors at any given point of time. These factors could be one of the following, but not limited to these: economic reports, geopolitical events, central bank announcements, monetary policy committee decisions, inflationary and deflationary pressures, natural calamities, terrorist attacks could be some of the factors, but not all of them. The price at any given point of time reflects all the factors, whether one takes them into account or not. As we've seen on our last slide, the price of a Forex pair could be influenced by a large number of factors. The currency price is actually a reflection of the economic state of a country. If the country is doing economically well, then its currency shall be strong, while a country going through an economic slowdown or a recession will have a weaker currency. It also depends on how the world looks at a particular country and its currency, and to what extent is the currency used in international markets. Until a few years ago, the Japanese yen used to be looked upon as a safe haven currency, and people used to immediately flock to the Japanese yen in difficult times. However, one can see that the USD has now taken away this position ever since the Japanese government decided to weaken the yen and interfere with the valuation of the currency in the international market. Therefore, one needs to be very careful as a trader or a speculator while trading currencies, as the price of some currencies like the Swiss franc or the Japanese yen in recent times have had major swings due to government intervention. One can trade currencies in various styles, which could be intraday, swing, or long-term investment. Each of these trading styles have unique characteristics, and one needs to find his own comfort and skill in one rather than dabble with all of them. The table reflects the difference in trading styles of short-term, medium-term, and long-term income trading styles. The next question is to ask ourselves as to why should one trade Forex in place of any other asset. Forex traders can trade on a highly leveraged market, most commonly at 50:1. Greater leverage than equity without the same margin risk increases potential profit and losses. Forex is a seamless 24-hour market divided into three major sessions: New York, London, Tokyo, with high volatility when these sessions overlap one another. The 24-hour market leaves low chance of gap risk unless positions are held over the weekend. Free and fair information with little or no inside information, as everyone receives data at the same time, with no one person or institution manipulating the market as the market is too big. Daily turnover of nearly 5 trillion in total allows the market to be highly liquid and very little slippage. Major banks are always willing to provide a bid and offer price. One can make profits from both upward and downward market movements provided the direction of trade is right. One can trade Forex with as low an account size as $100, and multiple opportunities for trading exist in the form of major currency pairs and cross pairs. Forex fundamentals. Forex market reacts to anything that might impact expected interest rates and economic growth, which represent inflows and outflows of a capital in that country. Reaction to these factors shape currency price movements on a daily basis. Strong economies typically have strong currencies. Supply and demand for currency depends on the current and expected future health of a country's economy. The Federal Reserve Bank is a private bank that controls the United States monetary policy. Since the United States dollar is the world's primary reserve currency, federal policies have a significant impact on currency valuations. As discussed in our earlier videos, interest rates are one of the most important factors in currency valuation. High interest rates typically attract foreign investment. Carry trades take advantage of the interest rate differential by borrowing in a low-yielding currency and investing in a high-yielding currency. The adjacent diagram shows us the interest rate cycle in an economy. If an economy is highly productive or consistently growing, this increases demand for goods and service, which leads to higher prices or inflation. Higher prices coerce central banks to raise rates. Higher interest rates produce greater gains from investments. Economy slows down as capital becomes expensive and recession fears kick in. Prices and demand fall, and central banks decrease interest rates to inject stimulus into the economy. Some of the factors that can influence currency prices are as follows: US dollar sentiment, exports and imports, consumer sentiment, oil prices, gold prices, housing starts, employment reports, gross domestic product, interest rate changes in a country, interest rate differentials between countries. We hope that you enjoyed our short video presentation talking about Forex, Forex markets, trading styles, reasons that make them a favorite asset class for every trader, and the fundamentals that control and affect currency prices. In our next video, we shall talk about derivatives as an exotic asset class for every investor, every trader, every businessman, every company, every institution, and every economy. Until then, please keep saving, keep investing, and keep getting wealthier. You may also visit us at our website www.polarvega.com or contact us at our Twitter handle @polarvega. Thank you, and look forward to see you next time.